In this video, we're going to be talking about the three best crypto indicators for predicting crypto tops and bottoms. And the reality is that the vast majority of indicators out there are complete garbage. They have absolutely no predicting power. And the reason being is because everyone is looking at the same damn indicators. And so if you're looking at the same thing as everybody else, then the chances are you're not really going to have success using any of these indicators. So I'm going to talk about three kind of more uncommon indicators. They're actually really simple to use. And in my experience, they've actually been really, really helpful. Now, in full transparency, I did learn this from my now partner. His name is Lee Ryder. And he was one of the only guys that I actually knew that accurately predicted the 2017 market top and then the 2018 market bottom within like $1,000 of the top and bottom, which was really, really impressive. And so I had asked him about what indicators and how did he do that. And this is some of the stuff that I actually learned from him. So let's go ahead and let's dive into this. So when I'm using indicators, I'm not really like a big day trader. So I'm not in and out of the market really a whole lot, especially with crypto. I'm kind of a longer term swing trader or buy and hold or investor. But I do use these indicators to know when's a good time that we could be rolling over and price could plummet, or where's a good time to actually dollar cost average, or if we're dumping, where's a good place that I think that we could find some support. So I'll explain to you these three indicators. So the first one is actually something called divergence. And I like divergence because it's actually a leading indicator. With most indicators are lagging indicators, meaning that they're kind of just like telling you what's showing on the candlesticks, but like they're behind a little bit, right? So they lag. Things like moving averages and most indicators, they do lag. So the reason I like divergence is because divergence is a leading indicator rather than a lagging indicator. So what is divergence? So if we take a look just on this Bitcoin daily chart, we can see that price is clearly in an uptrend, right? You can clearly see that here. However, if we come down to something like an RSI, we can see that the RSI is clearly in like a downtrend. And maybe I should have drawn that a little bit better. But there you go. So you can see that the market is moving up, but the RSI is actually getting weaker. So this is something called divergence. And it's basically saying that, yes, this move is going to the upward direction, but it's running out of steam. And generally when a trend reversal happens, it happens, not instantly, but the move starts to lose steam. And you can see that here as it gets weaker and weaker. And if you were looking at divergence here, I mean, you could have pretty easily seen that there was massive divergence forming on the daily chart on Bitcoin, and that's what happened. Oh, and by the way, regarding all these indicators, I like to look at Bitcoin on a higher time frame chart because the rest of the market pretty much follows Bitcoin, right? Ethereum and altcoins generally are going to follow Bitcoin. If Bitcoin's not doing well, then altcoins likely are not doing well either. So you can use this as an indicator of when to get into the market, when to get out of the market, etc. So the first tool that I really like is using divergence, and you can use it on the RSI. And it works really good actually at predicting tops. And it also works pretty good at predicting bottoms. It's maybe not as obvious here, but I'll just show you. So you can see here that clearly that's in like a downward direction. And you can see here the oscillator, the RSI in this case, is moving upwards, right? So this is just another sign of divergence. And then, I mean, you see it happen really all the time, right? Like, and once you look at it for a little while, then you'll be able to spot it. And I'll show you a little tool later on that will just like automatically spot it for you. But there you go. You see divergence again. So you see it happen frequently. And this happens in all markets, in all time frames, really. Okay. The next thing is something called the volume profile. And I don't mean it like the way that most people see volume profiles. And by the way, this is a different way of looking at a volume profile. So if I come here and I find the volume profile fixed range. So now we're going to take a look at volume, but instead of seeing it at the bottom of the chart like you normally would, now we can actually see it like this. So I'll just draw it for this time period here. And I can see where the volume is, okay? And just for example, I can see the volume at different price points. So this is how much volume there was at, like, what is that? $38,000, right? There's a lot of volume around here kind of at $38,000. I can also see this big yellow spike here. There's a lot of volume kind of around $48,000, right? And I see that there's not really any big volume up until like, up here around like 57,000, right? And so this is really interesting. This red line is called the volume point of control. And this is where like the most volume happened from like this data set from basically December 31st of 2020 until now. That's where the majority of the volume came in, meaning that's where the most action happened. It was right at around 38,000 or so, okay, 39,000 or so. So with that being said, how do we use this to make decisions? Well, we can use this to make decisions because the price will, the market will kind of get sucked through these what are called volume nodes. So see how there's a lot of volume right here at like 38,000, and then there's a lot of volume up here around like $48,000. Well, in between, there's really not that much volume. In these low points where you see very little volume, usually the price just kind of sucks right through there very quickly, okay? Because there's not much volume historically. So one other thing that I did find interesting is like, if you look at it, we've had this little move up and what do you know, it kind of like played right off of this support, right? And it sucked pretty quickly, right? Just like this past week or so, it went really quickly up to this other volume point of control, which was right around 48,000. And right at 48,000, we're finally getting some resistance where the market's starting to, maybe roll over a little bit or, maybe just have a break here because there's this big volume profile, right? So by looking at this, I would look at this and I'd say, okay, well, if it goes above, $48,000 or so, it's likely going to suck right up back into like $58,000 where the next big volume point of control is like right here, right? So this is how you use the volume profile. And the beautiful thing about the volume profile is that you can see it at different price points, not at different times, but at different price points, which I think is a lot more helpful for using. Okay. Now I will mention this really quickly. If you're finding this video helpful, go on over to Blue Edge Crypto on Instagram. I do put out a ton of helpful content pretty much every single day in short format, faster than I can put it out here on YouTube. So go ahead and give us a follow. And if you DM us the word viral, I'll actually send you a free guide on exactly how we find viral altcoins before they pump. And you'll find it really quite impressive, I think. So go ahead and follow us there. Okay, and the last indicator that is by far my favorite is something called the SGA. Okay, it's called the Spiral Guide Algorithm. It was actually developed by my partner that I was telling you about that pretty much accurately predicted the 2017 market top and 2018 market bottom. And he wasn't somebody that was just tweeting about that, but he actually bet his wallet that way and made a fortune in the process. And the reason I like it is because it makes trading really, really simple, okay? And I'll show you how it works really quickly and then show you how to put it on the charts. But basically the way that it works is it's comprised of this silver line or this gray line here, and then it's comprised of this colored line, which is, turning from green to red, as you can see here, right? And so the idea is to basically help you get into these big trends that happen in the market. And I know some people look at this and say, oh, it looks just like the MACD indicator. Well, that's about where the similarities end with this. The code and the calculation is very, very different from the MACD. And if you code it up and you test it, you'll see the results of the SGA versus the MACD. They don't even compare. So the way that it works, right, is the easiest way to trade it is basically when this line turns from red to green, that's when you can enter the market. And so you can see where we entered the market, back down here around like $12,000, right? And then it came all the way up until like here, okay? Basically here, I think it went red slightly. So it got us up to like this move, like right here, okay? So 33,000, pretty good trade. And when the market's reversing, then it just tries to get us out of the market, okay? And, it tries to keep us out of those losing trades, right? Or keep us out of that drawdown. And we've seen this time and time again with our bot because we've coded this up so it'll trade automatically as well. and it keeps us out of a drawdown a lot of the times. Now, the next thing is we see that it went green again, like right here. So we rode it all the way up until like right here where it turns red again, right? And that's the idea of the spiral guide algorithm. Now, there's a lot of other ways that you can trade it as well. One other way is trading it on this histogram low when it goes from dark red to light red. This is another one of our strategies. It'll help you get a little bit better entry points. So we'd enter right here and basically exit when the line turns red, okay? And the idea is to capture the big trends in the market without having to incur all of this drawdown, okay? As you guys know, if you've ever been emotional trading, the drawdown can be scary. Now, the other thing that I really like about this is I like that it spots out divergence. So you see these red lines, this is spotting out divergence for us, okay? So we can see the divergence there. We could also see this divergence during this bottom here, really simply. If you just traded the divergence, you would have pretty much nailed the bottom there, really close to nailing the bottom. And this is another thing that makes the SGA really, really cool is because not only do we have this trend indicator, but we also have a divergent spotter. The thing that I like most about this is it's an algorithm and an indicator that not everybody's looking at. And it also actually has edge. When you code it up like we've done and you run it across a bunch of different markets, you see that it clearly has an edge, okay? And that's part of the reason why we built it and put it together. Now, if you're interested in using it and trying it out for yourself, you can come over to bluedgefinancial.com/crypto and you can become a member and you'll actually get the algorithm, the indicator for free with your membership. So you can test it. You can use it for yourself and see if I'm a total liar, if this thing actually has edge. So just going over to bluedgefinancial.com/crypto. So to recap really quickly, my 3 favorite indicators for predicting crypto market tops and bottoms. 1 is divergence, 2 is the fixed range volume profile, and 3 is the spiral guide algorithm. If you found this video helpful, then you probably find a lot of the other videos on our channel really helpful as well. So go ahead and watch one of those.